Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Corman, Ed Carson here with a breakdown of the action in today's session, Friday, September 8th, where we saw the market fizzle to end a not so great week, Ed.
Yeah, it wasn't a great day, wasn't a great week. Want to take a look at a few stocks that are doing reasonably well: Shopify, Microsoft, and Marriott.
All right, we'll do that. But first, let's take a look at the major indexes. Today, the Nasdaq up 0.1% by session's close. The S&P 500 up just a little bit more than that. The Dow up some 0.2% today, and small caps, the Russell 2000 down 0.25%. So giving back early gains, and now it looks like support that we had at the 50-day now a resistance area here for the Nasdaq.
Yeah, pretty clearly there's resistance for the Nasdaq and S&P today. Got pretty close to those levels and fell off, partly because of Treasury yields, probably. So it's sort of a narrow. There's resistance to the 50-day line, and then the next level is the August 29 low for the follow-through day. So it's a very tight range. A close below that level would be a very bearish sign. We undercut it intraday on Thursday on the S&P and Nasdaq, didn't close below it, but if we close below it, that would be a very, very bad sign that the rally would very likely fail. Haven't happened yet, but that's a very narrow band, so it wouldn't take much. You can imagine if the Nasdaq rallied up to 14,000, people were like, hey, this is starting to look pretty interesting again. And a lot of stocks would be flashing buy signals. Really, I mean, that's really just a little bit more than a percent on the downside, even less than that to close below it. So, wouldn't we could have a very bullish or bearish take in just the next few days, but we're not there right now.
Yeah, we'll have to see which way we need to bend as further information presents itself. And next, let's take a look at the S&P 500, Ed. A similar situation here with these moving averages converging under the 4,500 level. And we also have to the downside that follow through day low, which roughly coincides with Thursday's low, and then the 50-day and a round number to the upside. So support and resistance at these very narrow areas, which I guess the upside of that is maybe if we break one way or another, there will be a little bit more of a decisive feeling on the direction. What's your take?
Yeah, it might. Of course, we might also have a situation like we open one direction or the other and then switch right back. So it may not be immediately obvious, but the odds just right now, it's the direction is not clear right now.
Mm-hmm. Yeah, definitely. We've seen some interesting intraday action. So looking at how markets shape up by the close, like this morning, great example. Things were looking fairly decent, not powerful, but it was kind of like, all right, let's see how this day progresses. And we didn't strengthen, we weakened. So, all right, next on the list, let's take a look at the Dow. So here's a look at blue chips, kind of around the same area where it's bumped its head all year long, around 34,300 to 500 or so, and below the key 50-day line.
Yeah, so it bounced a little bit late in the week, but it was the first to fall through the 50-day line, and it actually closed on Wednesday below the August 29th follow-through day. Not as important for that as the S&P and Nasdaq, but this has been lagging. You can look at that RS line. It's been lagging for a long time, all year really, which is not totally surprising, but this is not the leading index.
Mm-hmm. Okay, let's take a look at small caps 0 RUS. Hanging on by a thread here at the 200-day, do you think, Ed? It's been an area we've found support at the past, but this was a pretty bad week for small caps here, down 3.6%.
Yeah, really ugly week. If we go through the 200-day line, there's a good chance the Nasdaq and S&P go below their follow-through day lows. I mean, there'll be you can imagine a lot of negative scenarios. And this also speaks to the breadth. I know I didn't ask you about this, but maybe just show GMIAB, which is the Nasdaq Advanced Decline line. That's not going to show today's action. I believe we were about maybe slightly negative, but we're basically at long-term lows. I mean, you could stretch these things out. You're not going to get something lower. Really weak throughout August, and there was a tiny bounce, in the prior week, but it wasn't that good. And then we really deteriorated again. So this is a bad sign. NYSE not as bad, but this just shows you the weak breadth, the Russell. And this is not a good sign. There's a lot of, it's like, it's not just the indexes, the leadership is narrowing, the breadth is narrowing. There's definitely some negative signals out there.
Yeah. And what's one of the big factors, Ed? Interest rates. So as we saw the yields come off lows, it seems like, then stocks came off highs. Is that sort of the relationship that we're seeing? Of course, it's not a lockstep kind of thing, but there is that influence there.
Yeah, absolutely. And the rally in the prior week was to a great extent, and when the big gains came as the 10-year Treasury yield fell back. So we're clearly at the mercy. At some point, we don't care. Sometimes we don't care about the Treasury yields. Right now, we care a lot.
Mm-hmm. Okay, let's take a look at some ETFs of the dollar. If we look at the 10-year, we also like to look at the dollar. So reversing higher today and trading at its highest levels. Of course, it gets squished on this weekly chart here. Let me go to a best fit. There you can really see the week by week advance that we've seen from mid-July, and now the dollar at its highest levels since last November, Ed.
Yeah, so that with the yields, those are a real drag on the market.
Mm-hmm. Okay, well, one bright spot is the oil and gas sector. Here's a look at USO, which tracks crude. Last week was a big week, up over 6%, but this area was able to add to its gains, up about 1.8% on the week, hitting its highest levels since last September. So 1-year highs here for USO.
Yeah, really nice action here, and this is what's driving energy stocks. I mean, it's not too complicated.
It's really not.
It's not. So higher prices, and this is really dominated by Exxon and Chevron, which aren't leading the energy sector. It's those oil drillers, the oil services. A lot of those names are really doing well, but this is clearly the energy sector is the one real powerful sector right now.
Mm-hmm. Yeah, on IBD Live this morning, we looked at a number of names in the sector that were having really strong gains. Marathon Petroleum, MPC comes to mind. Look at what a strong week here, up 6.4%. And we saw other names in the group showing strength as well in this refining group there. Okay, next on the list, let's take a look at IGV. So this is the software sector eking out a gain today and going tight this week. On the week, managed an up week, up 0.6% after a strong week prior.
Yeah, there's a lot of strength in software. It's really impressive in some of the mega caps, but also some of the cloud names. Yeah, you're going to have some individual losers on earnings, but a lot of strength here. You wouldn't know that there was the Nasdaq had a terrible week. Adobe and Oracle earnings are next week. Those are the two biggest names in the IGV, so that's going to be a big factor for this ETF, but also just for what they have to say about cloud computing and AI. So I think those will be really important. But yeah, software looks a lot different than the chip sector.
It does. That's a great segue. Here's a look at SMH. Gap down below its moving averages on Thursday and failed to make up ground today. On the week, down 3.7%. So yeah, looking a little different here, Ed.
Yeah, NVIDIA, which is the biggest name in there, that one fell. It didn't have a the chart looks okay, but it was a big loss. This is the big component. And then Apple China fears, that's a bad sign for all those iPhone chip makers and maybe concerns about China chip sales just in general. So yeah, while software is doing better, a lot better than the hardware right now.
Mm-hmm. And two more ETFs here to look at IYT. This is the transports. So some deterioration here, undercutting the low of the base, off by 3.5%, Ed.
Yeah, probably the fuel costs aren't helping, but if you're outside of energy and software, there's not a whole lot of things that were looking that good this week.
Mm-hmm. So yeah, here's a look at XLI moving below its 50-day line as well, and near recent lows in this space. All right, let's take a look at some individual names. A compelling setup taking shape for Shopify with that gap up last week on the Amazon partnership news and now forming a handle. So, when we were talking about this move that day, that was an aggressive entry that the stock presented on 8/31. But I think a number of us were saying, Let's see if it can hold this gap. Let's see if it can tighten up, form some sort of handle. And it's doing that now.
Yeah, and on a weekly chart, I mean, it's probably not yet, but in an hour or two, MarketSmith will show this as a cup with handle. The daily chart still needs one more day. In some ways, though, the handle looks better on a daily, though. It sort of feels better. I will say it is going now, starting to fill the gap. It's now below the gap. So that is something. Now, maybe this is just a shakeout. Like if we rebound from here, that's okay. And we're not that far from the 50-day line. So this could start looking bad without too much trouble. So again, it's like everything else. If this rebounds, immediately go, look, this is an obvious buy. But it's like, so definitely, I think you'd want to wait to see some strength, at least breaking the downtrend of this handle. But yeah, there's like the growth. This is a turnaround. I mean, there's some names like Shopify. Yeah, it's been around for a while, but it's getting out of logistics. It's expanding into expanding the partnership with Amazon. Its business is transformed. That's why its earnings are going to be 52 cents versus 4 cents. And this is enormous and huge growth next year. It is definitely very much, once again, in the can slim for new.
It is. And regarding how, it wouldn't take much to make it look great, wouldn't take much to make it look like something we don't want to have on our radar. It kind of reminds me of that basketball player analogy that we like to use sometimes, how you just have to be so nimble, whether you're going to go on offense or defense. And so if traders can get in that mindset just to be nimble and quick on their feet, seems like it would serve us well, Ed.
Yeah, definitely time to do those exercises with your feet there, back and forth.
Oh, yeah. We don't want to break any ankles while we're trying to pivot. Okay, let's go to Microsoft. Software giant Mr. Softee up 1.3% today. Volume has been light as it's been working on the right side of this base. Potentially, though, Ed, an early entry here for this long-term leader stock.
It certainly could be. It could have been. I think with the market being under pressure, the volume being light, and the fact that we have Adobe and Oracle earnings next week, those all sort of speak to, well, maybe this wouldn't be the time to be aggressive. It's just sort of, there's just a lot of reasons to not. I mean, again, this could work, but it also feels like it's not super decisive above the 50-day line. If maybe after Oracle earnings on Monday, it pops up a little bit, yeah, you might pay a higher price, but you might feel a little more comfortable about things. Still nice to see this name come back a little bit. This, along with NVIDIA, was one of the, at least was one of the AI leaders. If anybody's going to make money off of AI, as opposed to just servicing just, but actually the AI services, Microsoft seemed to be in a good position. So if you're a believer in the AI hype, you'd like Microsoft to do at least reasonably well. So we'll see.
Yes, we will see. We'll see how this base shapes up. And last but not least, let's take a look at Marriott in the travel sector, up 2.8% today. Volume was lacking on this bounce, but pretty healthy looking price setup here.
Yeah, I mean, travel is definitely a mixed bag. When Marriott broke out a couple months ago, the travel sector looked pretty strong. Now there's a few names that are doing all right. It was a pretty good bounce off the 10-week line. The volume was light. It wasn't terrible. It wasn't anemic, but it wasn't great. So, I suppose like if you got above last week's high, you could probably argue some kind of early entry. A base is in the process of forming, probably needs another week to form. That would be something to watch for. Again, not a great market, and the sector is sort of iffy. But I just trying to bring up something because a lot of the energy names are extended.
Yeah.
A lot of names are like not a whole lot of stocks to buy right now. I mean, there's some areas that are doing better than others, but there's not a lot of things that are actionable right now.
All right. Well, we'll add it to the watch list. Okay, Ed. So as we wrap, what should traders be thinking about for the week ahead?
Well, just talking about being nimble either way. It's just again, like if you're on a mountain road, you don't want to be like, that's not when you step on the gas and you're weaving through the curves, or when the weather conditions is like, even if you could get away with it, why would you want to risk it? It's not a straightaway highway. So it's just doesn't seem like a time to be stepping on the gas. If you have some positions where you can probably hold on to them, assuming that those positions aren't, falling apart, aren't flashing sell signals, but, probably want to wait and see how the market develops. But while you're waiting and seeing, take the weekend, build up your watch list so you're ready if things get better, but also you have to just be ready to step back.
Right. Yeah. It seems like the bull case here, this is a normal digestion in the early stages of a bull market. But on the other hand, we shouldn't just go all in if we are still in this rate hike cycle that seems like a major headwind. And with the economy potentially still on shaky ground, there are still those looming concerns there, Ed, and that could make its way into the equity market.
Yeah, and just to I mentioned Adobe and Oracle earnings, and on Tuesday we'll have the Apple iPhone reveal. I don't know how much that will really move markets because there'll be a new iPhone. I mean, I don't know, but there'll also be Lennar. There'll be the CPI inflation report. So there's not a whole lot of news events, but there's some news events that are pretty important at the same time.
Okay, well, we'll have to see how the market reacts to those headlines next week. Thanks so much, Ed. And thanks to everyone for watching. We will be back with more on Monday morning on IABD Live, and we hope you join us, investors.com/IABD Live, for all the details on that. We'll see you there, and we'll also see you right back here on Monday, not tomorrow, because that's the weekend, on Monday at the close.